Hey everybody, welcome back. We have a lot to go over. See this little line right here, and you can just see how you came to that 42.78. It's marked off right here, and then you can see where we're at right now, 43.20. You can see the gap fill, you can see the lower lows, and you can see the lower highs, and the mystery is now off. But we have some other new mysteries that are developing that we're going to have to address right here. To start with, we can all see our shelf right here and how we held above that shelf. We're going to drill into this in a moment. I think it's important to just look at how many pieces are actually in this area and what we're fighting. And then, of course, you can see how we're acting. It's funny, I do appreciate the comments and keep them coming. Somebody said to me the other day in one of the comments, this is really easy. We just keep going down. Tell that to the person that just had a 20-point swing in Meta today. I'm going to review that as well. The volatility here is crazy, and it's probably going to get crazier, and we're going to explain why in a second. But if you see how you're wedged in here, you can see that we're selling off. There's very little for us to do except watch this level. There's not much more to say here. I'm going to draw in one other line here on a trend line in a moment, and you're going to be able to see it. You know, it's going to be pretty obvious. But if you take a look at how this is playing out, this is a level that we have to watch. Now, we held and we bounced, and there's nothing better than when you hold a certain level and bounce from it. For example, if you have a trend line here, and you can all see that trend line. Matter of fact, what we'll do is we'll clean up these others and we'll just drop in the major one. And you are at a really big inflection point here, guys. I can't really be any clearer. You do not want to break this. When we did the private call this morning in the public pre-market, the one thing that we were just hammering home over and over and over again is you do not want to break this downward trend line. You bounced off of it. Are you going to hold? We'll see. We have to go through Micron's numbers. We have GDP tomorrow. We're going to cover this. But this is where you got wedged in. Now that we know where we got wedged in, we know what we need to watch. It does make life very simple for us. You know, we know that this level here is definitely something that we have to pay attention to. 42.77 is going to be big. 42.77 is an area we're going to watch very closely and see how we act. Now let's drill into this a little bit more, and then we want to zoom out as well. When in doubt, you zoom out. But here we are on the weekly for a moment. You can see where we're sitting. You can see the lower low. It all fits in perfectly. Drill into this on the hourly, and this is really what I love to see. I love to see when everybody plans and they have a game plan, and then that game plan goes away. That fear, that panic, you can really profit from it. I mean, I hate to sound so Machiavellian, but we're in it to win it. And what you see happen is when you're supposed to break and then you don't break, that's when everybody puts that trade on. If you've been watching this for weeks, what I've been saying is that whether or not this is a head and shoulders, and again, make sure you subscribe because all these videos are connected starting on Saturday, and then we just follow the patterns. But when you were cracking here, this is when you start putting it on. You start putting this on. We started shorting in here when you started breaking these lines. When the right shoulder is developing, if this is a head and shoulders, that's where you start putting this on. You start watching these other demarcation lines and you start putting it on from there. I mean, do you want to be shorting into this? And then what you're doing is you're using the other risk. So you're using that as a stop. You're using this. It breaks again. Then you're using this as a demarcation line. Breaks here, you're using the top of that as a demarcation line. And then so on the way down. That way, by the time people come here, you're scaling out when everybody's looking for this break. You do not want to be getting into your initial position of a head and shoulders break at the neckline. That's pretty much where everybody's going to try to get in. Every algorithm, every institutional trader in the world knows that, and they're going to take advantage of you. And it's really that simple. It provided some great opportunities today to play the other side of the market, candidly. Also provided some great short opportunities when they rallied and then fell back down again. But get into that in a moment. Also, I do want to talk about Meta, and maybe they just shouldn't let Zuck speak. But if you look at this, and let's just take a step back, clean that off. Pretty glaring. It's so obvious that we were going to break. Here we are. We've broken, and we got a whopping what out of that break. So in other words, nobody's going long or short because they're waiting for this to break. And let me explain to you why I'm pointing this out to you so that you don't become one of these people. This was the move to develop the right shoulder. It's 4.5%. This is the move that it took to come down. That's your neckline right there, 4.5%. So if you tested here and said, I'm not buying this because this is going to be a right shoulder, let's say you missed 4% up. Let's say I'm not going to get involved because I want to see that it breaks. You lost 4%. You had 10% of gross movement in the ES, and you would not have participated if you were going to be super technical and wait for a neckline break. And now you're going to short into the neckline. And let's say that you did it perfectly and you shorted right into that neckline. What did you catch? If you're still short right now, if you closed it at the absolute bottom where you were, you made 1.5%. Okay? So keep that in mind. 10% of gross movement versus 1.5%. Up to you which side you want to be on. When you're this oversold, you want to be paying attention. That's one of the key things that we talked about a lot recently. I went through those watch lists. If you remember on the S&P, for those that are new, I'll do it again very quickly. But one of the things that we keep talking about is when you get to this level, let's clean this off, stocks above the 5-day moving average. Percentage of stocks above the 5-day moving average, you were at a 9. You can always go lower. It can always get worse. Historically, you were at a 9. There is a bounce out there. 96, there is a sell out there. And this is exactly what is happening to us. If you really go back and take a look at it, and candidly what we can do is even do this with it, and you can go back and back test what I'm telling you yourself, and you can look at these dates yourself and see where they are, and you're going to see how they align perfectly. Here's where you're at now, with highs and lows in the market. This is actually the regional banking crisis when we're going to lose every bank. And this is where we're at. We're at the low end of this. And so what you want to do whenever you get into this area right here, you want to start looking for some kind of reversal. Now, I want to be clear about this. This is not my idea. This is how the world looks at these names. When we start looking at something along the lines of S500, which is the 50-day, which is one that you must watch. I went through all these on Saturday. I went through them for a reason. Let me show you that right there. And the reason I went through it is because it's critical. Now, the fact that we're breaking that level, that should not make you feel warm and fuzzy at all. It means we're losing other sectors. Micron tonight was a little bit of a dumpster fire. But this is not a metric that just retail looks at. Institutions look at this. Goldman had this in their institutional research today where they were talking about it. And this was one of their top 10 charts that they were showing their institutional clients. So that tells you how pivotal this 50-day is. This is what institutional clients are looking at. We have access to the same thing. Quite frankly, we have access to the same thing for, it's supposed to click up there, we have access to the same thing for free. And I do appreciate your comments. I can actually carry out more content if I do it raw. It's easier for me putting these out instead of all the editing. So please comment on that, but I will continue to do that. And please continue to share. Let me just show you this. So this is something Goldman puts out every morning. 10 specific things they want everybody to know. Number 10, percentage of stocks in the S&P members, I guess it's called the daily shot that they use or where they get their data from. I'm showing this morning where you're at, and they're just putting it into perspective for you. And I think it's really important to understand that not only are we looking at that, but if you can find a data point that institutional investors are also looking at, I would strongly suggest that you utilize it. And what might not be the worst idea is to look at when you got down to these levels and say, was there a bounce out there? And usually we see one. Now, in the longer time frames, when we start to see these cracks of 50 on the 200, we really don't want to play with this. You have to assume underperformance. I think we're all assuming underperformance right now, to say the least. We did have a nice move in a lot of some of these sectors today. You know, XOP up 3%. This is exactly what you want to see. This is from the newsletter. If you don't get the newsletter, link in description. There is a free version. You can just see it came right to the DTL, held, bounced, and went from there. XLE was the second performer of all sectors, and you can see that as well, held. And now look at where we are. Positive notes today. I'll be looking at both of those. Tomorrow, GDP comes out. Then Thursday night, we have Powell speaking into Friday PCE. It will not be boring. And certainly Micron will not make it boring as well. Now, in regards to the dollar, we can see a clear break, a 12-month base. Here was your DTL downward trend line, up, down, retests, holds the 200. And we talked about this exactly 2 weeks ago when we said it's going to take about 2 weeks to get a golden cross. There it is. I also said it might not be that bad. They might be able to mitigate it. They are not able to mitigate it, and we broke out. So there you have it. You can see that level there. So, and as far as thinking that this was going to stay in some kind of trading range going across, that just did not happen. What happened actually is you've just broken out. And we go back to the exact time of when did this happen? Around July 27th, when Japan came out and changed their bond policy. It's not rocket science why this happened. And it's causing stress. It's causing a lot of stress out there, and we can see that. So this is definitely something we have to pay attention to. It hurts industrials more than any other sector. Why? Industrials are weaker dollar. They buy our goods, Boeing, and they want to buy these kinds of goods. That's why if you take a look from July on, Boeing collapsed. John Deere was holding up there for a while, but After a while, it started to falter. It's not a question of why that the high is round when this all came out from Japan. It's not rocket science, guys. It's all predicated upon the dollar. You're all around the same level. It all comes back to the dollar movement. It has nothing to do with the companies themselves. They're very tied. Industrials are very tied to the dollar. It's the easiest thing to do. Dollar rises, short industrials. It's just the easiest trade out there now. It's just very simple trade. So you can see how we're acting here. This looks to me like, if this was a stock and this wasn't the dollar and I didn't want the dollar to not go higher and I was being objective, would you not buy that chart? You would be all over that chart. You would be all over that chart. So that's something to think about. It's not what I want to see, nor is this what I want to see with the 10-year. But there it is. So you're probably going to 5.25 is where I think, and I think it's going to be extremely painful. I really do. I think that's why you're seeing so much pressure on the XLY names. I really do. They're just completely imploding, and we're seeing a lot of that today. I'm going to clean all that off, but you're seeing a lot of that today with just the XLY names. They're just continuing to implode, and there's a bunch of stuff that we need to get into, but let's just talk about the NQ, clean this all off, and we can see very clear rallies. And you're still at your net level right here. You're not broken yet, so maybe it does break. Micron, again, didn't do it any favors this evening. I think we have to get through GDP, PCE, and see what happens. We also have some things we have to go over here, but when we look at this, is this something that you want to be out there shorting right now? Now, if we drill into this on the hourly, I don't know that it is. We're not at that oversold level we were just at, but we're still kind of oversold. Not as much, but if you drill into this on the 4-hour and you drill out of that, you're grossly oversold for a period of time, and you've been working off the oversold and grinding up as it's coming down. That does give us a positive divergence, and I do pay attention to those. So I think you're at some kind of crossroads. Now, they don't always work, and I think that's a really important distinction, but it's definitely something to pay attention to. You can see how you were down here, and at the same time, if you look below, you can see how we went sideways. What does this mean? It means that you have to watch this neckline and see if we're going to break. When you have a declining 55, as all these have right now, where we have that declining 55, you can't possibly look at this and say, oh, by declining, we're starting to rotate. Not only are we under, but we're declining. It's pointing down. You can't feel warm and fuzzy about the Nasdaq or anything that's going on. You have to look at what's actually happening. And there's a lot of names that we should cover just to get a sense of it. Micron tonight, it was not ideal. They beat. But is it a beat? If they basically have no gross margins, which is basically what they have. Now, at the time of recording this, I did not listen to the conference call, but gross margins were abysmal. Free cash flow was abysmal. They beat the estimate, and they came out on the revenue side. But if you're giving your product away, which when you dig into this report, the gross margins, I believe, were negative, who really cares? It doesn't really matter what you're selling something for. So I think that could be an issue for the company tomorrow if we just very simply clean that all off and just look at this plainly. You're getting to this pretty crux of a level where we keep having this battle. There's a lot of positive comments on this. If you take a look at it after hours, I don't see any real love for it whatsoever. Matter of fact, I always watch the first 5-minute bar, get a sense of it. Once that broke, that was it. And you can see that. The other thing you can always do is just make it a 1 minute and look at it from there. And one of these quick tips I've given in the past is you just drop a VWAP on it. After hours, you can just start seeing where the players are after hours. And it's just a real quick tip. It's really simple to do. And then you just put an anchored VWAP there. You just see after hours, there was no love. And really simple trade breaks, and that's it. You could literally use the top here and say, oh, I'm in for a buck. I'm just kind of grinding down. But there is something that I do want to go over, and it relates to the ES. And I think it's very important for people to understand this. You could have broken today. You have no reason to not break, and you held. And I just think that we have to keep that in mind. No matter what we want to say, the dollar's going higher. The VIX almost hit 20 today. The 10-year is going to 5%. I keep hearing about this credit event and how this is going to be worse than 2008. I'm going to tell everybody why this will not be worse than 2008. And I'm going to say it in one sentence, because we're aware of it. SPX dealer gamma at spot. You can see the date here and the date here. What it's showing you is, are S&P dealers short gamma or long gamma? And here is the zero line. And here we are, negative 3 billion in gamma. And this is a reading that we have not had even since the pandemic. Gamma is very simply just an options risk metric, is the best way to explain it. And you're looking for a rate of change in an options delta. In this case, you're looking at the index's delta, and you're betting that delta is going to drop, and you're trying to profit from that by shorting gamma. Let's walk through this and what could happen. You see how you're seeing these spikes in the market, and it just defies all kind of logic why you're seeing these spikes. this is why you're seeing these spikes. If we are to rally for any reason, this can get really vicious to the upside. And this is the reason why it can get vicious to the upside. This is not me. This is Goldman that put this out. Obviously, you said that they say here, but obviously if you see something like this, it's off the charts, and it definitely is worth something paying attention to. And this is why you're seeing those kinds of swings on the simplest of news. For example, if you take a look today, watch this on the 5-minute for a moment. And we were laughing at this in the community, but look at what happened here. And what was this? This was McConnell saying we're trying to avoid a shutdown, and boom. Over the simplest comment, Schumer saying, yeah, we're going to vote no to a shutdown, like they're doing something. And that was it. And we just exploded. That's one heck of a move over something that doesn't even matter. 1% in a very short period of time. And this is what you're saying. But also at the same time, we're at this critical level. So I really think we need to pay attention to that, and we really need to focus on that. And that's something that I would suggest. Now, if we start looking at some of these key names, and that's really what I want to focus on here, I want to focus on these key names and show everybody like a very simple pattern that they can do themselves, especially when you have news like Meta today. It's something that everybody can do, and I want to point it out because it was pretty simple. But if you look at Apple, this is your demarcation line. You do not want to break this. We had one up here that was a minor one. This is a major level on Apple, and you don't want to break it. I can't stress this enough. No, it's not at that level of, this is like a major one. No, we've already, if you really take a look at it, if you come off your low and you just come straight up, you can just see the straight buying in Apple. It was just glaring ever since January. You just see it just straight. It was crazy. Who knew that you were going to get that kind of move out of it? But yet here we are. So even if you come here and you look across, you broke, you rallied over, you've rejected it, and you broke. So no matter how you're looking at this, you can't be feeling good about it. So you know that you've broken that upper channel no matter how you're going to draw those trends. But now you're sitting on this major level that goes back all the way to August 22 when we broke again. And this is what we have. And this is what we're dealing with. So if you clean that up and you just look at that level, now what I don't really like about it is we were unable to hold that level today. And that's something we're going to have to pay attention to tomorrow. I'm just going to pop that there. It's actually a little tighter. I want to get that really as tight as possible for what we're about to go over. But if you drill into this on a 5-minute, this was glaring. Let's put this over and let's get this over to regular. And you can just see that battleground right there over and over again today in the past couple days, actually. You're testing, holds, flips, breaks, right? And you just kind of say it over and over again. The other one up here that you finally broke, and you can see how that went when you broke up here. Now you're fighting that area. And the question is, are you going to hold it or not? We'll find out tomorrow in greater detail. We are grossly oversold. We've been grossly oversold. We haven't had some major kind of bounce, but maybe we're there with it. I don't know. You had a couple people come out and defend Amazon today. We did some trades in these off the open and then just spent the day scalping it. I don't see anybody really committing a lot of money to this until this solves itself as to what it's going to be and how this is going to resolve. They're going to fight it, but they're talking about some pretty serious allegations, and this takes years to unwind. So I just don't see institutions going crazy in this kind of market for something like this. And I think that's something that we should address. A couple other names before we get into Meta that I think are really important. If you look at NVIDIA and you look at this crux and all my 300 lines that are there, and we just take that off, let's just very simply just drop these in. There's nothing redeeming about this from a 1222 cross, from a 12 pointing down. You have level after level after level that you're going to hit. You're getting doji after doji after doji. Dojis are signs of uncertainty. You could look at this a couple different ways, and we're going to. Number one, you could look at this and say, we have the short-term trend down. Now I'm getting dojis. That results in what? A change in trend. Okay, that's one argument that you could make. The other argument is, we're really not able to get above that break from when we broke down there. We're really struggling and saying we're still sitting there, maybe a higher high, and we can get up to that 436. Maybe we can work up this, and we look for pattern recognition. And obviously people probably already saw this, but if you kind of take a look here down, and you realize you're up 1.5% today when the Nasdaq was actually making new lows, you might want to pay attention to those names that broke new lows. So you kind of have a pattern here, don't you? And you can see it here as well. It's not the greatest pattern here, but it's still there and it's still here. So when you see these kinds of patterns, you just kind of pay attention to them, because when everybody's ready to throw in the towel with this name and they're selling it, it seems to find a way to turn around, and you can see that over and over again here. So what do we do about that? Well, the very first thing I do when I'm trying to figure out how I'm going to play this is I'll just go into like an hour. I just want everybody to see this. If you really go and take a look at this, you'd have to go to Thursday to find the low. Now, to put that into context, do you have to go to the Nasdaq and find the low Thursday? See where you're at, right? So you start looking at this and going, well, oh, the low is today, okay? But it's not for NVIDIA. All right, so that's something to think about. How about the SOX? How's the SOX doing? Well, we hit a new low today, okay. The SOX hit a new low, the index hit a new low, NVIDIA has not. All right, so that's something you pay attention to. I'm just going to tell you, you have to pay attention to that. You start seeing this level, you start seeing how you're starting to turn, and you have some issues here, sure. I mean, we can put in the basics and just drill into this, drop that to an hourly, kick out the vol, take out the average, and just look at it. Right? And so you see, okay, well, what else is going on here that's interesting? Well, all of a sudden, we're staying above 50 over and over and over again right here, just like we did here. And then you go, well, that's really interesting, isn't it? And then you just kind of drop a line. Oops, let's get that line. And what you're doing is you're getting that line right there. And then you're dropping into that and going, well, here we are. And now we're over. And the last time we were over was here. That's giving you a target of roughly 460 on the stock. And that's how you kind of look at this. This is where you are. This to there is equivalent to this to there. And that kind of gives you that 460 coming across level. Does it happen? Does it not happen? Look, I've seen weirder things happen in my life. And I look at this on a 4-hour and go, we're not taking out this low from a month ago. We're not taking out this level. You start going through this on a 4-hour chart and you realize you haven't even taken technically out a lower low yet. Doesn't mean that you can't. You sure look like you're starting to form some kind of base in here. You sure look like you're flipping this level. You flipped it here before. It took a couple days for it to catch up and then it ran. I just wouldn't sleep on it. If I do something as simplistic as drop it into the 15-minute and overlay the 3, the 5, and the 8 with it, look what's going on. And I'm going to get specific with some names today that I think that if we do bounce that you should look at. So you can always comment on specificity. I try to figure out what's going to add the most value tomorrow. You look at SMCI. Candidly, this is one we bought yesterday, and I like this breakout, 252. I didn't like the action at the end of the day. I didn't even hit my stop. I just took it. I just got out of it and closed it. I didn't want the overnight risk. And that comes to me, or how I look at the world is, that comes to me from experience. If I'm down on something and I'm in this kind of market that we're in right now, I do not hold overnight. I don't just say, oh, I'm sure it's going to hold, because you have no idea what new horror show you're walking into the next day. You really just don't know. So in these kinds of scenarios with Micron, GDP, PCE, PAL speaking, if something's not working for me, if it's not up significantly, I'll just go to cash. I'm just better off. And you're better off knowing yourself and how you trade. So here we are with SMCI. I wouldn't sleep on this one either. If we start to turn and you start looking at what's happening here, you get these crosses. You don't really want to sleep on those. Now, Meta, if they learned anything today, it was probably to not let him speak a lot. He started speaking, and it didn't go well. These guys caught it in the room, and I'll show you this trade in a moment. I wanted to show you this pattern. Anybody can use this pattern. If I have more time on Saturday and you're interested, I'll get a little bit more into it. But you see how you're coming straight across here, breaks, rallies, can't get over. You see your level. There was a short position, but there was another one here that made a lot of sense. And I'm going to show it to you first, and then I'm going to show it to you and how I did it in the community, and I'm just going to walk you step by step. So you see these wicks that are in here? You want to pay attention to those. But wicks are what? Wicks are price rejection. So this was a very simple trade. You never want to be first. You always have to realize that when you cascade down, you're going to rally. There is no, we're going to cascade straight up, unless somebody had a fat finger. Other than that, it's not going to happen. So once you do that, you're going to establish a new range when you come down. You might want to listen to this a couple times. So you're going to establish a new range. You're going to come down, and that's going to establish the range, the low range. And then you're going to come back, and you're going to retest that area, and you're either going to break it or you're not. At this time, you're going to form a wedge. That wedge, here's your flag. You can call this a pendant. I don't really care what you call it. That bar right there, that gave us a perfect entry for a scalp. Now, my thought was that it was going to go and drop right here, and then you can just see what happened. And then we just got in the same situation over and over again. But this provided a lot of really good entries. It actually even gave us another short opportunity up here. I'm not going to cover that one tonight. We did do that one as well. But I want to show you this and show you how you can see this develop. This is the observation room. I'm the only one that posts in here. And then what I'm doing is I'm just talking, be careful bottom fishing here. Meta, not sure what he's saying on the conference call, but they should cut his mic. I crack jokes because I'm humorous. At least I think I am. But Careful fishing here. I typed fast. Bear with me. And what you're seeing is you're seeing the trade develop here. And let's see if I can blow that up. It's easier for me to show you what I show in there instead of me just doing it through a time lapse. But you can see that right there, and you can always comment on this if there's an easier way to do this. And now you start to see it develop. And what I'm pointing out is I'm just pointing out that you're starting to get into an area where you're developing resistance. So we point out, hey, let's just start watching that level. Let's start seeing what's happening. And then we're just watching it getting uglier and uglier and unable to lift. Note my chart. No RSI, no volume. It's completely irrelevant. All I need to do is look at price in situations like this. Getting ugly, watch 293. Short scalping meta, boom, I'm in. Right here. That's where I'm in. And let me tell you why I'm in here. I'm in here because I'm starting to make lower highs. I'm in before the crack. I don't want to wait for the crack. I want to get in ahead of time. And then in, boom, up, and now I'm scalping out what you want is positive slippage, so I'm getting out into that. I don't think I need the pointer, but I'll grab it anyway. I'm getting out in there. I'm not waiting to see if it's going to bounce back up and run me over. And then the whole way down, all you're doing is here, and these are all the timestamps from the day. All you're doing is you're pulling out as it drops, right? Patience pays. What do I mean by that? You let the trade develop. Instead of saying, oh, I'm going to buy this or I'm going to short this, just let it develop so you can actually see what's going to happen. And maybe you would have made more money if you moved a little faster, but the volatility's there and you don't know if they're going to take you out with one of those wicks. Once you break that low, you're establishing what? A new possible resistance level, right? Support becomes resistance. Again, I don't have anything on the chart. I threw a VWAP on the time of that was announced. As it comes down, we're pulling more and more out. I'm just talking about the educational class I'll have on Saturday in the community. And then you're breaking. On the way down, you're scaling out. This becomes your stop on your remaining stock. You get over it. Meta, I'm out. Thank you very much. On to the next one. Now, what about this trade is really important? It took a whopping, if you look at the timestamps, 15 minutes. Now, what you're starting to do is you're going to notice a couple things. When I post that, there's positive divergence on the chart. So you can see the positive divergence here. This is why I love the market when people tell me that RSI doesn't work. See where you're at right here? If you go look at any RSI video, I did one a while ago, but if you look at any RSI video and they talk about positive divergence, that's the definition of one. Look where Meta is, 291 when that happens. Now, I had people that were in the room that took the long side. I was interested in shorting. Now, the question is, what do you do with Meta tomorrow? For me, I think the most important thing for Meta is to sit here and watch. How do we act in here? Do we get back over that open and push, or do we start working our way down through that bar? We don't have an issue. The most important thing to watch tomorrow, index-wise, is just going to be the SOX and see how the SOX reacts to Micron. Is it going to be muted or is it not going to be muted? That's what you have to pay attention to. But that said, let's just be Captain Obvious here on a couple things. Number one, you broke a key level today in Tesla and you were unable to hold and get above it. Number two, you broke a key level in Apple. You were unable to get above it. Microsoft is sitting on a key level. If you get rid of that and just drop it in just to make it even cleaner, you're sitting right on that key level. You are at an injunction and you have to see what happens there because we are seeing signs that this could continue. And quite frankly, a lot of this is going to be dependent upon GDP tomorrow and what comes out with PC on Friday. And I want to leave you with this. Understand, if you do have a government shutdown, that means that we don't get economic data why a government shutdown is going on. And what that is going to do is that's going to create economic uncertainty because we're not going to have data to trade off of. That's it.